Why am I wearing a Pokemon hat? Because I'm going to give you some very high alpha content today. What is the difference between stonks and crypto? What is the difference? Are they different? Yes. Yes, they are. There is a different meme or idea or belief in the minds of investors that participate in those asset classes. They are separate. They are different. They are distinctly different. I'm now going to explain it for you. You really understand these, friends. We've got to go through this multiple times. This is your conviction to make it. This is ultimately why crypto grows to 100 trillion. I've explained it for you many times. We're going to go through it deeper. In stocks, you are transferring between entitlements of cash flow profits. That's stocks. In crypto asset class, you are transferring between mindshare of human attention. So we'll go through that again. In stocks, when you trade a stock, you're like, hey, I now own Tim Apple's company, Apple. When you own Apple, you have a database entry on the DTCC, the Department of Cuckery in New York, the city of New York's. There's a database and it says, you little Jimmy and Jessica, both of you now are entitled to Tim Apple's cash flow profits of Apple company. They have a balance sheet. You are theoretically entitled to it. Theoretically, wink, wink, from a crypto guy's perspective. Everybody in stocks believes, oh, I'm definitely entitled to it because of the judicial system and the legal things. And like, and we'll go, okay, bro, you don't actually own it. If they want to press the off button, you don't own crap. Okay, but stock market people, we'll give it to them. Okay, they believe that's their cash flow entitlement. And then they also say, well, if stocks went down too low, so Apple is 3.5 trillion market cap. Okay, that's Apple. So what would happen if Apple's at 3.5 trillion, what happened if Apple went down 99%? Whee! Let's say go all the way down. Let's say if Apple just went, you know what, we're going all the way down, brother. We're going all the way down to 30 cents. What would that mean? Okay, what would it actually mean if this happened out here? Okay, so 99.99%. It would mean Apple's new market cap, when it's at 3 cents price, is only $350 million. Now, the meme, okay, it's so powerful, it would never let it get there. Why? See, it could get there if the government says you don't actually own anything, peoples. You own nothing. Okay, now you're worth zero. But assuming the government says that, why can't Apple really get down to that price? It's because in this nice world, if you bought Apple at that price and you bought all the shares for $350 million, you own basically hundreds of billions of dollars of assets out there. You own the factory, you own the branding. They have these like different assets out there. They've got cash in the bank. They've got like $100 billion in the bank. How could the stock price trade that low? That's what you're doing here. So you're trading entitlements to the ownership of this company. That's pretty much what you're doing, okay? Now, this is different to cryptocurrency. See, with cryptocurrency, friends, we're transferring between mindshare of human attention. Now, that's interesting. Mindshare, human attention, that doesn't sound very fundamental to me. I know. That's why I'm wearing a Pokemon hat. You see, why do I say mindshare? Well, it's because we live on the internet. Yeah. When you buy or sell a house, a home, an apartment, a unit, farmland, okay, it's physical world stuff. It's not mind share per se. It's physical land share because it exists in our 3D realm. That's what real estate is. Real. Yeah? You can touch it. You can nick it. You can sniff it. You get it? Okay, but in crypto, there's no guns. It's a borderless nation on the internet. There's no geography. As Judge Auntie Carol asked, where does the blockchain live? Where does it live? It's hard. Okay? Not that type of hard, family-friendly hard. It's hard as in to understand because the messages of the nodes, it's split all across the world at any moment in time. Interesting. There's nodes all around the world. It's like it exists all over. Okay? But then you might say, okay, no, it exists from the message of each node. Okay, but in one transaction, your message goes to Finland and then Antarctica and then China and then back to you. In another message, it hops to America, goes to Florida, goes to Toby's mustache. Don't know where he is. Maybe Illinois. Goes all the way to Mexico. Then comes back to you. Are they the same? The messages went to different places. You see? So how do we account for that? Well, it's you're living on the internet. That's pretty much it. So when you're swapping a token, you're transferring Mindshare. Now that's the interesting part, right? Why Mindshare? Well, it's not physical. It exists in your head. It's basically your network community on the internet. And I've written here human attention. Because that's all it is. Because you can't put a gun to them. In the real world, you can put a gun. The government says, hey, you see this block of land? You have property tax for us. This is your address. We send you a letter. You owe us the taxes. If someone lives in there, we can identify you. This is linked to your account. We can see everything. Yes. We don't have that in the digital realm, crypto. Okay, the government, they're figuring this stuff out slowly over time. Barely, slowly. I mean, I figured this stuff out. I'm here helping you. You know what I mean? So they still got to figure this out. They go, well, how do we tax this stuff? I don't know. How do we even, who owns what? It's hard because your coins are not stored anywhere that you control. They're stored on the internet. Your coins are stored on the network. All you can do is control the key. And the key is something you can know or unknow. Very interesting. Very interesting, isn't it? So that's the difference, right? The difference between stocks. Stocks, you're trading cash flow profits. That's what they're swapping around. Oh, this thing's too cheap. They're making a lot of cash. Oh, this thing's too expensive. They're not making that much cash. That's what we're always trying to figure it out. And in crypto, it's about the number of people in the network, yes. So you're trading Mindshare, which I'm going to get to the next part. So in this part, friends, I remember I showed you crypto is more like digital real estate. It's similar to a city. Actually, almost basically is a city. It is a city. And the scarce commodity is your human attention. Because that code can always be copy-pasted. Okay? And I've explored this for you previously, but to remind you, the market is efficient. The market is smart. The market is wise. It knows code can be copy-pasted. So in a world where everything can be copy-pasted open source, a token that just focuses on being a product, it has a very thin razor edge. It can't sustain itself. Because it can just be like literally duplicated everywhere. So what's the rare commodity? Human attention. In stocks, human attention has no value pretty much. It's about the profitability of the company. That's why in stocks, you have a company, you look up their stock, you've never heard of them before. You know? Like, what's this Johnny Jones 542 liberating company, holding company? You've never heard of these like weird words on the stock market. And then you look at them and you see some brands that they own. You go, oh, they own they own some weird stuff. So, but the market doesn't care about that. It doesn't care what the name or logo is. They're just looking at the balance sheet. They're looking at the cash flow entitlements. They go, dude, I don't care what the name is. I don't care that your name is literally like a Batman symbol, because you have $100 million of assets, $20 million of liabilities. You're making, $30 million of free cash flow every year. Sweet. You have a PE ratio. We'll give you a market cap of $1 billion, whatever. You're trading at 10 times that. There you go. You see? So your stock is valued. There you go. I've already done it for you straight away. We don't have that in crypto though. It's different. We haven't even perfectly explored how you measure mindshare. We try to. We look at social media engagement. But here's the thing. We can only measure the beacon of it. How do you measure how much mindshare is stuck in your mind? We haven't got there yet. Someone will make a model one day, and it will be effectively pricing tokens on the internet more efficiently. Because right now, for example, a celebrity can come in, launch a coin, it gets exciting for a day, and they rug it. But maybe if you had a model, they'd be like, you know what, this celebrity, they have very, very low mindshare retainability. Very tough. How do you measure this? Like, you almost got to hook up someone's brain. You got to dig into everyone's memory banks, and then you're going to have a neural network of everybody. Interesting. We're not there yet. As I mentioned to you, the community is the asset, not the code. This is why stocks can be priced using cash flow pricing models and PE measurements. That's what they call the fundamentals. That's why stock market people that come into crypto, they go, oh, you've got no fundamentals, bro. Where's your cash flow? We're digital real estate. There is no cash flow. Okay, if you have a piece of land in New York, it's a patch of grass. Where's your cash flow? You got none? Okay, give me a piece of land for $12. And you'll say no. You'll tell me to go suck a fat lollipop, wouldn't you? And I'll say, why not? Why not, sir? Your lollipop, your land is not making any cash flow. It doesn't even have a building on it. It's literally just a patch of grass. I'll give you $12. Give it to me for $12. And I'll say, no, 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 no. I could sell this for more higher price. Okay, but what's that person going to do with it? I could put a block of units on it and build an apartment and then sell it. Okay, so we're dealing in the world of speculation. I could do this and I could do that. What the hell is that? It's crypto. That's just real world crypto. Crypto is internet real estate. Actually, that's what it is, friends. We've found the way we can move value on the internet, and it can't be copy pasted. The value can't be copy pasted. That's the coins. So crypto does not go well with those pricing models, right? You know, with Metcalfe's law, I always talk about Metcalfe's law, and it's extremely important. That is the trajectory, the price model, the valuation model of these networks. So when you have two people in a network, the value is 2 because it's 1 squared. When you have 3 people in the network, becomes 9, and then 16, and then 25, and then 144. You are squaring the value. And that's what it is here. This is literally it. See? It's going parabolic. You are squaring it as you're increasing the number of people. So when you had like, you can do it here. When you have 2 people in the network, okay, your value is 2 squared, which you get 4. When you have 10 people in the network, your value becomes 100. That's wild. You added 8 people, but you got a value increase of 96. Isn't that amazing? So you added 8 people, but you basically got a 96 valuation increase. That's exponentials. That's pretty much as a crypto, right? It works on Doge. Doge in 2014 had 400,000 holders. And then in 2021, it went to about 4 million. So it did a 10x of the user base. If you check the price increase, Doge did about 100x. It did like 250, and then it came back to around the 100x. There's some euphoria and stuff because, like, you know, there's people who join the network fast and then leave, and you can't measure that, right? But you get the baseline. It happened with Ethereum. It happened with Bitcoin. I did it on Cardano. Cardano had 10,000 daily active users in 2020, and then it did a 10x on that, did 100x price growth. It worked actually on Hex as well. Hex did around a 6x on top of its Metcalfe's law value, probably because Richard was pumping it hard and blew it above its like fair value. But eventually, all these things mean revert. So you get to see it works with everything. It works with everything. They're hard to measure up. There's a lot of bots, fake accounts. It's hard to measure, but it does work. That's pretty much what we see in crypto. That's why crypto goes exponential. That's why it goes exponential. You see, it's different to stocks. In stocks, you could have a company with $1 billion of assets and $200 million liability, right? And it might trade at the same PE versus another company with $100 million assets and $20 million liability. Just the numbers bigger, yeah? The number's big on that, but yeah, it would trade at like the same ratio. It could trade at the same ratio. But it's less flimsy. You know, I'm just giving an overall, just a summary of it. Of course, there's different sectors. They trade at different PEs and stuff, depending on the investors. But yes, in crypto, different game. Because it's so easy for someone to join the network and leave the network. There's just swings of volatile. Metcalfe's law also worked for Shiba Inu. It's a very, very famous example. I will never ever forget this, like my shock when I discovered this in the bear market. Shiba Inu had down here, it had 1,000 holders, and up here it had 1 million, 1.3 million. So 1,000 holders into 1 million is 1,000 times 1,000. So it did 1,000x user base growth. So if you do 1,000 squared, you get 1 million X. Basically, so there was no forecasting, is what gets everyone confused. It's not forecasting, it's the trajectory. So basically, if you could forecast back in January of 2021, when SHIB had 1,000 holders, if you had a crystal ball, and let's get the crystal ball. If you had a crystal ball and you said, hey, we have 1,000 holders here, we will have 1 million holders by the end of 2021. If you knew that, yes, well, your price expectation growth would be that 1 million X. It would be, you would have landed from here. If you did your 1 million X, you land there, around there. Okay, so you would actually got around this price increase, this zone up here. Yeah, but that's not, but the magic, friends, was not, the magic was not knowing where the price is going to land. No. The magic is having the belief or the ability to know or feel or sniff out that SHIB was actually going to grow that big. That was the magic. It wasn't that you could guess where the price was going to be. Yes, because it's ultimately you're saying, oh, more people are going to join the network. So remember in stocks, right? Stocks is different because in stocks, everybody can be aware of, let's say you have a Coca-Cola drink. Everyone can be aware of it. But if you're only making like 1% profit margin on that, but everyone in the world knows and loves Coke, it doesn't matter. The stock market doesn't give a crap. Everyone knows about it and likes it. They barely give a brand premium on that. They go, hey, you're making this much money. It's trash. Maybe you get some premium in terms of optimism going forward, but that's it. That's it. Totally different in crypto. In crypto, you can, like, we've already seen it. What's Doge do, bro? You literally do nothing. But everyone knows about you. Everyone's in the network. You are worth billions and billions of dollars. Just like a city. Just like a city. In crypto, it's all about the community. The more mindshare you have, which sustains, the more people are inclined to join the network via token buying and give it a higher valuation. Very important. See, in stocks, people have an inclination when the price goes really, really low, they are inclined to buy it up low because it can't go down too much as a floor. Otherwise, they will take over the whole company and get all the profits for themselves. Okay, there is an inclination, a meme, if you will, when it comes to crypto people. If there's a community and people just like joining it for whatever reason, they tend to buy the token at the same time or near time they join. They do. It's a phenomena. I don't know what it is. It's part of human nature. I don't know what it is. And the market sniffs it out. It's a chicken and egg problem. But it is what it is. Okay. So basically, you will not find a token of a community at like 1 million market cap when that community has 40,000 people in their Telegram, and actual 40,000 people part of it. You won't find it. Even if just a few of these people know the token exists, it prices itself over time, which is fascinating. Even if you don't tell them to buy. Now, the strange part is, if you look at the coin and the community and you say, hey, Somi, what does the coin have to do with the community? It's all like Fugazi anyway. I know. I'm not here to confuse you more because it confuses me. I'm like, dude, the coin has literally nothing to do with this community existing. I guess they just feel like they've got to allocate in. And that's actually what happens. different sectors, different telegrams, different communities, different languages, different countries. It doesn't matter. It's amazing that it actually happens. People feel like if they're in a community, there is that like the market prices itself. It is what it is, man. It's a trajectory. It's a network. I would love to look at this real time. I would love a community get bootstrapped so we could study this. A community gets bootstrapped and there's a token, and then you get to check the wallets and interview people. Hey, why are you buying this token? And you find out the answers for everyone. Why are you buying this token? They might say, oh, I'm speculating. I'm getting in. I don't know. We've got to, I don't know. Like, it seems like it's cheap. They might say that. Some guy might say, oh, this community's got like 40,000 people in there, and this is only 1 million market cap. You know, like, it's bigger. It's a stronger, better community than these other. You might find everybody has their own opinions, but the wisdom of the crowd gets you an answer where it's like, oh, we're pricing relative valuation to other stuff out there in the market. All obviously descendant from Bitcoin from early days, but like obviously more stuff. We might find something like that. But individually, you wouldn't find people talking like that all the time. You'd find people saying, oh, I don't know, it just launched. I'm just getting in. I don't know, I've seen the logo. I like the logo. Yes. So it's fascinating like that. Now, remember, your edge is not knowing that the price is going to go up 100x if you 10x the user base. That's not the edge. Even though it is unique edge if you really think about it. But that's not you don't find these discrepancies out there. It's conviction. It is very, very high alpha. But your real edge is believing. It's believing that it's going to grow. That's the edge. It's seeing the logo's catchy. It's being shielded everywhere. The community's strong. They're doing conferences out there. Do you know what I mean? That's the edge. The edge is you seeing that. You know there's an information gap. So you know, oh, many people, they don't even know that this community is going to be bigger and louder in 3 months from now. But I know that. You know, I know that. I can see the conferences. Okay? I can see RG3. The pirate guy. That's your edge. So in crypto, right, just like a city, friends, what's the number one city sin? It's leaving the city. It's abandonment. The number one sin is abandonment. If you have a business and you abandon it, it can still run itself. Yeah, it can. I mean, Warren Buffett even invests accounting for what he calls basically a monkey brain retard CEO to take over the company. He basically accounts for a retardio to run the business. Because it's got a good product, it's got a good moat, he can't mess it up. He accounts for that. You know, you could draw some similarities in crypto, but in crypto, it's about mindshare. It's so competitive. What's your moat? You know, you need a really powerful idea. You know, Bitcoin, friends, runs itself. You don't need Satoshi. Bitcoin was almost like, it's funny, Bitcoin and Doge, now I think about it. Yeah, they're the only coins where the founders abandoned and it was a community takeover and they're still going. They're still going. But look at the odds, by the way. Do you want to rely on that? You don't. Because people will naturally go to the best product market fit they can of an abandoned coin rather than probably like continue. Because you got to have a real big idea. You know, it's like Bitcoin rallies in a bear market. Doge is man's best friend. The history and the story behind it, very hard to replicate. So as you get to see, everything starts as a meme. They evolve into a cult. They mature into a religion. So you've heard that many times before, haven't you? Memes, cults, religions. Where's the cash flow? Where's the utility? It's not there. Maybe one day someone will make something really useful that can't be replicated. Yeah, maybe. It's pretty hard, man. And I'll keep thinking about it. Do you know how many times we've tried? I mean, look at Ethereum. Copy, paste, copy, paste, copy, paste. Ethereum copy pasted itself into oblivion with the layer 2s. This open source world. So it's all about that meme, cult, religion archetype. That's what keeps these things going over time. Not just that utility, okay? Once you tell the world you are a hammer, the guy next to you makes a bigger hammer. And the guy next to after that makes a cheaper hammer. And the guy after that makes multiple hammers and he attaches it to your wallet. You got like this little mechanical hammer that comes out of your wallet. He sells it for like a penny. And then it's like so overly supplied. People start giving out free hammers just to get people in the door of their business. So what started off as innocent utility, now you've got nothing because you were the hammer guy. That's utility, by the way. So if you're the utility guy in crypto, you're getting chopped up to pieces. Thousands of people are just trying to copy paste what utility you have and just try to cut you down. But you can't copy paste that demand generation of that meme, cult, religion, archetype. You can't copy paste that, can you? The story. Okay, you're joining a digital city. You can't go make another New York or another Miami. You can't do that. You can try, but you can't really. Can you make another Vegas? No, you got to do your own twist on what you think Vegas is, like Macau or somewhere else. You know, but you're not going to have the Vegas. Get it? But we're looking at the unicorn winners cities. You know what I mean? So it's easier said than done. But ultimately, right, Bitcoin was a meme, became a cult, exists as a neo-religion now. And you've seen this picture many times. There's memes, upgrade to cults, upgrades to religions. The wisdom of the crowd, right? They already figured all this out. Now, even in the roll this forward, friends, let's go futuristic. Let's talk about artificial intelligence. If you try optimize a product with AI, think about a world where there's 3D printing and there's AI. And imagine you made a cool product. Well, your neighbor has a 3D printer in his garage and he's got an AI. He types into AI. He goes, hey, here's a picture of my neighbor's table. He's got a cool backyard table. I want that, but I want it with more seats and I want it sturdier and I want a nicer pattern on the seats. And the AI just makes it. And then you've put it out there in the world and then someone else makes an improvement on yours. So there you go. Everybody's product getting chopped up to pieces. Your product edge. Very tough, isn't it? That's you keep rolling this forward. That's what happens because we're lowering the cost of supplies and making materials and stuff out here. And you're lowering the cost of these, and AI is helping you do that. Even websites, everything. So now you get to see why people aren't stupid. The market's actually smart. The market knows this. It knows in an open source copy paste world, optimizing for product advantages, you're a dead man walking because you're going to get sliced and diced by everyone. You got 1,000 eyes and ears looking at everything. Every advantage you get, they're just chopping the rate, making it razor thin edge. So what are you left with? Like I said, human attention is the scarce resource. But then you roll that forward again. What happens in a world where there's millions of economic agents out there? They don't sleep, they don't eat, they just work 24/7, they have their own wallets. How do you get the attention of an AI? I don't know. But that's the world that Raoul Pal is almost like scared of in the 2030 to 2040 decade. But before that point, crypto is going to have to go really, really, really big. That's why you and I are still early. And when that world comes, we'll eventually get there. We'll figure that out. But that's why we are still early on this train, this gravy train of crypto, before we finally get to this point where people don't know how to price things anymore. And also, economies start boosting even more because you are doing people's jobs as an AI agent, but you're replacing a lot of people. You're making it deflationary. People are getting out of the system, so you have to print more money. So no matter how you spin it, crypto goes up. But now you know, friends, human attention is the commodity. Fundamentals of crypto means human attention. Are you a fart? Are you wearing Pokemon hats? Do you grab attention? That's fundamentals. If you sit there in the shadows and you do the job right and you're like an amazing hammer, okay, dude, good luck. Because there's 50,000 people trying to make a better hammer than you who will make a better hammer than you. That's the tough part. Now you ultimately see the difference between crypto and stocks, friends. Crypto, we are involving ourselves with Mindshare, human attention. It's digital real estate. When you join a token, you're joining a digital nation. It's a country on the internet. I call it as a joke, as a book club, because it really is. Yeah, and people like trading between them. They like doing that, okay? But ultimately, where does it leave us? Well, hopefully, we get the whole world in And then we'll figure that part out later. Like, subscribe, belly button, all. Catch you soon.